Welcome to my trade review from yesterday, November 13th. 13th. So let's go. Start to let's do this. Okay, so um, what do we see in AU? Um, Prior to this this what has happened here, we very choppy. We were respecting bearish market structure. So in order respecting this fair value gaps have marked out here, this one, this one as well. So we closed up. We respected that fairly well. So this sort of we saw a good respectance on that order block. And then I would say that we kind of leave more fair value gaps behind of these bearish candles. So we are bearish overall. You can see here. But then we kind of after this price leg, kind of after this price leg, we start to be even more choppy and we kind of stop our movement to the down. So we kind of start to be more choppier, even more choppier out of this range. What happens after we spike to the downside? We take out all stops from these equal lows, and what happens next is we see break of structure to the upside daily. We start to break all these highs that had created, and we left now equal highs here. There's a decent target to go along to. We're not necessarily gonna sweep that. We could see some kind of this kind of price kind of pull back to up here. So okay, could even see a downside action a little bit more. Could take a long time before we sweep that, but I think we are eventually gonna sweep with that. But yeah, daily. That was my analysis. So I'm gonna go probably long biased, and I was long biased because we were so deep into this price, in the premium of this price like well. We were in the premium of this price, like we were in this order block. We could see a reaction to the upside here. So I'm gonna go long from here. That was my idea, kind of. Now, now this 4 hour chart kind of made me hesitant because you know what I'm saying. We have very powerful move to the downside. We have volume to the downside, and volume kind of appears here. We start to consolidate. Now, looking at this, so looking at this order block, as you see here. Let's look at 4 hour. We see very much like wicking movement inside of that order block, especially in that 50% so mean threshold area here, which I absolutely love to see. Now we do sweep all the liquidity left this week, and we kind of consolidate further more. We are definitely expecting some kind of higher pricing for the fact that we were in the discount of this price leg. And not even counting this price, like we could count only this one because this one had overall down and this week mitigated this fair value gap. So that kind of invalidated that somewhat. And then we saw very choppy and corrective price here. So I'm not 100% necessarily gonna expect market to displace up here again. At least I'm expecting market to have higher prices that sector. So yeah, we see choppy move up. So usually when you see powerful move down, choppy move up, you want to sell from the premium of that price, go lower. Now that's not necessarily gonna happen. Um, because the higher time frame can suggest that we could be going long. I wouldn't enter. Let's say one thing: I wouldn't enter a swing trade from that might stop somewhere. It's really possible that we that maybe even well, feel eventually gonna. I feel like change the structure to the back. So equal highs left there. Now hourly chart. Here is the trade that I took. So hourly chart we top here we were building structure to the upside. Now hourly chart, what do you see? Do you see early gaps or anything like that? Do you see PD raise? This kind of choppy market structure. Well, one thing I saw was this fair rally. Now this is something that you have to kind of practice to see all these kind of PD raise, but this fair rally gap is very clean there, and we much true that I use that as an inversion version. We respect all of this. We don't close below. We respect all of these. Go to the upside now. Then we break the upside. Break of structure. Cool. And let's just mark out my idea to which area I like to see market at least go to. So it would be in this Fibonacci trace right here. So the 0.6818. So yeah. So we saw break of structure. We have our new order block. And not only we have broken structure to the upside, we have also swept liquidity with this week to the left. We have respected nicely this version. So the bullish market structure is being respected here clearly. Now, considering like hourly, this is somewhat of a displacement, but I wouldn't necessarily call it a clean displacement because it doesn't really leave fair value gaps behind. M15, you can see there is few fair value gaps. So, for example, this one, and so here market does not print any fair value gap, so there is not immediate reason why market would need to go down. Now this fair value gap printed, we come back to that. What is respect the consequent encroachment, and we go to the upside. Now we sweep this um, line, but I'm still expecting higher prices because we are kind of just starting the uptrend, and we want to see even higher prices, deeper mitigation thing, price level. So I want to see higher prices now. What am I expecting for? Um, I see respectance of this order block of mainly what I see is market sweeping these areas of liquidity, this and this low sweep quite correctively. So the whole day I wasn't seeing anything really. I was kind of looking for sells there, especially in EU. We're probably gonna see sweep at some point. Nice liquidity there. But yeah, after you mitigate that order block, after this kind of choppy move downwards, we didn't see any kind of clear and obvious trades, in my opinion, in London there. So where would you go short in London session? Um, you wouldn't go here. because there is no structure being broke. If you are comfortable with M1, then there might be something. But then M3, where first time we break structure is here. Don't see a good enough pull. Could have taken your entry here, but it's not like clean price. I'm not comfortable with things. I'm just thinking myself like we either see a break of structure to the upside here, in which case I'm comfortable trading. Then I'm just not gonna trade today. So now we came down here, we started to consolidate. New York session opens 17 5 p.m. my time and 10 a.m. There you go. We a strong push to the upside. I scroll down to the M3 because that one that I like to use in this kind of scenario. So you consolidate here. You don't sweep that eagerly any liquidity. That's okay. I'm saying my stop below these lows. Break of structure happens very cleanly. This is the exact thing that I was waiting the whole day. Strong push direction that I want to take the trade. All displacement, breaking structure as well. Now I took the equilibrium price point of this flag. I saw this M3 fair value gap. Now on hindsight, the greatest entry would be at the main threshold level. I took my entry around there, a little bit below the equilibrium at the break broke. No, no, no. But yeah, from that. And why this is valid trade is because you see this the fair value gaps, you see this leaving everything behind. Then the price action to the downside was choppy. When we go to our period range, we actually put back to the upside. So it's a very valid and good setup. And yeah, that's basically the trade. I just put my target to this high. I was targeting that to be swept, and that played out nicely. Now we're seeing the copy market structure to the downside. See what I come up today by minus trading. But yeah, that was the trade.